Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be revisiting a stock analysis we did back in May of Alibaba, ticker symbol BABA. In today's video, I'm going to go over Alibaba's price target, earnings expectations, growth prospects for Alibaba, fundamentals, the price history, and headwinds Alibaba is facing, their performance versus some of their top peers, and then lastly, my final thoughts on Alibaba. I do stock analysis, personal finance, and investing videos. If you like this type of content, please consider subscribing. And if you like it at any time, please hit that like button. Now to your content. Now, my price target for Alibaba is between 300 and 350 in the next 12 months. Now, since there has been some slide in the stock price from about 220 since my last analysis, that adds some upside from investors from the current prices around $200. Indicating about a 50 to 75% upside. Now, there is risk that comes associated with this name. We'll talk about some of those risks later on in the video, as well as some of the underlying fundamentals that support the price target. All right, earnings expectations for Alibaba. They announced their earnings on April 3rd, pre-market, so before market open. Earnings per share estimate is at $2.21 per share. And on the revenue side, they anticipate $32.32 billion for the last quarter for Alibaba. All right, so looking at growth for Alibaba, if we look at 2018, 2019, and 2020, they had a growth rate of 58%, 50%, and 35%. So you can see that there was a gradual decline in the revenue growth rate year over year. Moving into full year for this current fiscal year of 2022, yes, it's fiscal 2022 for them. Their annual growth, their revenue estimate is at $143.53 billion, and that indicates about a 31% growth in full year 2021. It's fiscal year of 2022 for them. And moving on into year ending March 2023, that would have an estimate of $173.47 billion, and that indicates about a 20% growth from the revenue estimate of 143 the previous year. So you can see that analysts are expecting a pretty substantial decrease over the next several years in Alibaba's growth, but still 30% of a large company of Alibaba's size is a very decent chip of revenue, and 20% of an even larger number is still a very large growth rate for Alibaba, and they are generally generating a lot of cash. Let me know what you think about Alibaba's growth in the comments below. All right, so moving into the financials for Alibaba, if we look at the revenue over the last several years, you can see they had about $40 billion as of end of 2018, and they've grown that all the way up to $109 billion at the end of fiscal year 2021. You can see the growth rate started at about 58%, 50, 35, and then the last year in 2021 included a little bit of 2021 was 40.72 billion. The gross profit also has been decreasing a little slower than the revenue decrease, but still very strong gross profit margin there. EBITDA margin, slight decreases there as well. And then on the net income side, decreases there, and you can see some slowed growth. So as revenue has increased here from 71 billion or 72 billion to 110 billion, you can see that the net income has only increased by about 2 billion from 21 up to close to 23 here. So you can see a pretty substantial drop in net income margin, and we'll look to see that expand hopefully in 2022 more into a positive direction instead of what we saw happen in the last fiscal year. All right, so next thing I want to look at is free cash flow. So if we look at cash from operations, they had last year in fiscal year 2021, they had about $35.3 billion in cash from operations. Capital expenditures came in at about 6.3, so about $29 billion in free cash flow. If we use that from the market cap and divide by, if market cap's at 543 currently, and we divide that by 29, we get a price to free cash flow of around $19, which is actually pretty good. Usually like to see that around 20 or under 20 is a pretty good deal in most cases. But with Alibaba, you see a very large growth rate in comparison to their size. So I think something over 20 would actually be a little bit more warranted on this name. So I think there's a great value just looking at the price to free cash flow. If you don't mind, please hit that like button. It helps me out a lot with the algorithm. Now back to your content. Now, there definitely are some risks that come along with Alibaba, and some of those are regulatory. So looking back almost a year now, we had Ant Group IPO was delayed. They had a $2.8 billion fine. There's worries about future probes into antitrust. Will it happen? Will it not happen? There was the issue with Jack Ma. He said some things negatively about the Chinese government, and then he just kind of disappeared. There were those investigations almost seemed like they stemmed directly from Jack Ma speaking up. There was also this growth stock and interest rate concern about as interest rates go up, the growth stocks start to come down. Now, those interest rates have actually gone down since that time. They went up to about 1.6. I think they're around 1.2, 1.3 right now. But if those continue to go up or go back up, we could start to see that being talked about again. Another thing is delisting threats. Now, I don't think that's a very big concern for Alibaba. It's really more of those regulatory concerns. Will they be delisted? Will the Chinese government try to push U.S. investors out of the name? Now, they are listed on the Hong Kong market, so you can purchase those shares directly there as well if you want to hedge your risk that way. There's definitely some ways to hedge your bet, with these risks here. So I'm not super concerned about them, but they are definitely something that you want to look at. You want to make sure that it fits inside your risk profile. All right, so next up, I want to do a price comparison between Alibaba, Amazon, JD, and Pinduoduo. Now, this is over the last year. I just wanted to see how have they been performing against each other. And if you can see, Alibaba, out of all these names, has fared the worst. Now, is really see the inflection point somewhere back here. You started to see some bumps in Alibaba's name, but really since, what is this, February, this is where we started to see the decline of Alibaba overall. You can see Pinduoduo, which is another Chinese firm, has seen, a really large drop in their name since that February timeframe. JD.com also seen not as substantial, but pretty big drop. And Alibaba actually, compared to two of their biggest competitors, over, if we're looking from the February timeframe, they've actually fared pretty healthy against them in terms of how much they've lost. And a lot of this is stemming from some of those risks we discussed on the last page. It's not just affecting Alibaba, it's affecting the Chinese investments across the board. And also across this time period, you can see that still over the one period, JD.com is up 10%. Amazon's up about 3% for the year, the last 12 months. And Alibaba's actually lost 24% if you got into it a year ago this time. All right, so when it comes to Alibaba, I think you really need to be focused on balancing the reward potential with the potential risk. And if you're okay with the risk we discussed earlier in the video, I think an investment in Alibaba is definitely warranted, at least for a 5-year time frame. You can get kind of past and ignore some of the noise that's happening with the regulatory front there in China. I don't think they're going to take down one of the biggest companies in China. I could be totally wrong on this. But just the potential and what Alibaba, not even potential with Alibaba, they are delivering results. This is a company that is, delivering value, solid growth. They have positive net income. They're delivering really strong cash flow. This isn't just a company that has potential to be a big company. This is a big company that continues to deliver, and historically and comparatively to their peers, Amazon's of the world, they are very undervalued, in my opinion. That price to free cash flow of around 18 right now, that's insane. That should be somewhere probably 25 maybe, and that's probably cheap as well for their name. But point is they're undervalued on that metric. And the P&E of 23, while it's, let's say a P&E of 20 is normal right now, they're a company that's huge, delivering in 2 years 20% growth. That's insane. They're going to be doing $170 billion in revenue. That's a large company. continuing to grow at a really nice double-digit growth rate, which is just solid. So I really love Alibaba right now. It's one of my biggest convictions, and I'll continue to put money into it if it continues to go down. One thing that I did want to talk about was if it does go down past 180, the next stop is around 170, and then below that would be around 150-ish. I don't think it's going to get, if it goes down below 180, it might go into the 170s. I don't think it's going to get into the 150s. If it does, I'm going to continue buying unless something substantially happens. And that would have to be like you see, something happens with the government intervention, or you see some really deterioration on sales. You see attrition on something that is causing negative growth to a large aspect of the company. Those are things that would make me change that kind of the investment, my investment logic on Alibaba. So you need to be looking for things that change something core to Alibaba's business, something big. And there's nothing out there that's warranting the huge price decrease. If anything, it's what this huge price slump is causing really great buying opportunities, especially for an investor looking 5 to 10 years out. You're going to see some really great returns if you invest in Alibaba and you have a nice time horizon to look at. So I really like Alibaba. Hope you enjoyed this video. Thanks so much for watching today. Please tell me what you think about Alibaba in the comments below. Please hit that like button, subscribe if you like this type of content. More to come in the future. Thanks so much for watching. Frank Finance, out.